Welcome to another Mr. James accounting tutorial. Today's we are looking at 2016 accounting unit 2 paper 2 module 3 planning and decision making. We have before us all the data for module 3 2016 keep accounting paper 2, and I'm not going to be reading all of this on the video, but I have read it and I will leave the reading of it up to you and go right into the answering of the question. And before we do that, let's see what here. Instructions, additional information. So I will go in required. Prepare an inventory purchase budget for each of the months October, November, and December. Part B, prepare a schedule of expected cash disbursement for inventory purchases for each of the months October, November, and December. And Part C, prepare a schedule of budgeted cash collections for each of months October, November, and December. And Part D, briefly discuss three uses of the budget in a typical organization and briefly describe the three styles of budgeting. Part A, the purchases budget. We are required to do a purchase budget for the 3 months ending October, November, December. That's the last quarter of the year. And I have brought over here the information from the question that we will need. And similarly over here. Um, you cannot do a purchases budget if you don't know this formula on the side here. There are some things in accounting that you have to memorize. This is one of it. Okay, so you start with the desired ending inventory, you add the cost of sales, or you could do it the other way around. Start with the cost of sales and add the desired ending inventory, and you will get your total requirements. And then you would less from that the opening inventory or the beginning inventory, and you get your purchases figure, how much you need to purchase for the particular period. Okay, now let's look at the figures themselves. We are told that the inventory on hand at the end of each month must be 12.5% of the cost of sales in the following month. Inventory as of 30th September 2016 is $32,812.50. So you can ignore the 50 cents, drop them off, round the figures because this is a budget. Okay, the figures are estimated. And okay, so this 32,812 or 813 will come in here as your beginning inventory for October. It's coming over from September. And the open desired ending inventory, in fact, is 12.5% of the next month's quote of sale. So it will be 12.5% of 393,750, and that will give us the 49,219. To that we add the cost of sales from here, and we get 262,500 plus 49,219 equals 311,719 minus the beginning inventory, and we get the purchases here. Okay, now the desired ending inventory for the first month becomes the beginning inventory for the next month. And we go through the whole process again with the figures. The desired ending inventory here would be 12.5% of the next month cost of sales, would be 218,750. We will get 27,344. We add that on to the November's cost of sales, 393,750, and we get 421,94. That's our total requirements. We minus the beginning inventory, what we got from up here, and we get our purchases. So November. Then we do the same thing again all over. The ending inventory here becomes open the open inventory here, and we take 12.5% of the next month, January, 175. We add on the 218, 750 from December, get the total requirement, and then we minus the open inventory and we get the purchases for December. Okay, so that's it for your purchasing budget. Remember, you must know the formula here. So memorize it. It may come in your exam. Part B, expected cash payments for inventory. We are asked to prepare a budget for cash payments for the inventory or purchasing payments. All right, I've brought over here the purchases from the last answer party: 278,906, 471,875, and 213,281. Right, and over here they give us how they require to have this budget made out. For inventory purchases, 65% is paid in the month in which the goods are purchased, and the remainder is paid in the following month. Accounts payable at the end of September for inventory purchases in is 78,000. So we have two cycles, a 65% cycle where it is paid in the month in which the goods are purchased, and the remainder, the other 35%, would be paid the following month. Okay, the 35% and the 65% must equal 100%. This 78,000 is 35% from September, that is come to be paid in the second month, which is October. Okay, so we come to the expected cash flow, and we can or cash payments, and we can head it up like this once again. Three columns, one for October, November, and December, and we put in the purchases that we calculated previously. And our first cycle would be 65%. We can calculate 65% of each one of them. And the next cycle would be 35%. However, it does not come in this line. It goes in the other column, right? This 78,000 is from September, 35% that has remained unpaid. And look, when we add these two together, we will get the 259,289 as the payment for October. In November, the 65% from here plus the 35% from there, the second cycle, is 91,617, and we'll add the two together, we get 404,356 for the payment in November. Then in December, we have the 65% from the first cycle, 213, 281 gives us 138, 632, and then we have the 35% remaining from November here, which is added on. We get 303,788 as the payment for December. Okay, so this is a nice little way you can put it together if you didn't know how to do it. And stick around, the part C is coming up. Part C requires a budgeted cash collection. Again, we can head up as we did October, November, and December, and we can use the same cycle approach as we did in for the purchasing. For the sales, we have this is how we are to make the budget. 25% of cash is collected in the month of the sale, 50% is collected in the first month following the sale, and 23% in the second month following the sale, and the remaining 2% is uncollectible. Okay, so you are not going to collect 2%. Sales for August and September were 200,000 and 250,000 respectively. Okay, so some of these would be collected in our period, right? Notably the 50% and the 23%. The 2% will never be collected. So when we add these three cycles together, we should get 98%, not 100%. Okay? So I've brought over the sales figure here from the question, the data given in the income statements, and this is how we're going to collect it. The first cycle would be 25% of whatever sales we have for the month, so we can calculate 25% of that. Okay, then the second cycle is 50% of the previous month, right? So that would be 50% for October. It's going to be 50% of September, 50% of that is 250,000, and we'll get the 125,000 here. And the 200,000, it will be 23% of that, and we get 46,000 here. So we add this together and we get 264,750 as our collections for October. And we have the same thing happening in November. 140,000 is 25% of the 562,500, and then we will get 50% of the 375 here, and that makes us 187 500, and then 23% of the 250,000 gives us 50,750, and when we add them together we will get 378,875. In December, uh, we have the sales being 312,550, 78,125 would be 25% in the month, and then we have the 50% from here, 281, 250, and the 23% from here, 80,250, making up a total of 445,625 we will expect to collect in the December. So that's how we will approach something like this. Again, we can go through the figures on your own, just in case I made an error. But stick around for part D. Part D asks us for three uses of a typical budget, of a budget in a typical organization. And I will give you more than three, I'll give you about six or seven. So the first one is planning. Budget is a formal means by which an investigation leads to a financial statement of future intent. The formal aspect of preparing a budget through a budget committee provides for participation in the planning process. Coordination. Organizations are complex arrangements of separate parts whose coordination is necessary to achieve the best result for the organization as a whole. The budget will act as a form of coordination of human effort by allowing separate parts of the organization within the firm to work together to form plans and monitor results. So that's coordination. Communication. The budget can be used to communicate plans and control information throughout the organization. A budget could be used for motivation. A budget provides a target which can influence aspiration levels and motivation within an organization. Okay, that is more or less self-explanatory. A budget serves to control specific operations, activities, or groups and to prevent wastage and inefficiency. Next, we'll have performance evaluation. The budget can be used to measure the performance of individuals or groups by monitoring the ability to achieve targets. And a budget could be used to authorize expenditure or the pursuit of certain initiatives. Once the budget has been approved, it can become a permission to spend. We move next to the three styles of budgeting. Part E requires us to give three styles of budgeting. The first style of budgeting is what is called the imposed budgeting or authoritarian type of budgeting. This style is most frequently used in centralized organizations where the key budget decisions are made by top management and lower level workers follow instructions. So the budget is imposed on the lower level workers by upper management. It is often described as the top-down approach. The advantages of this approach are that it is easy to implement, removes bias towards certain departments, and facilitates coordination. The disadvantage is that it cuts out the expertise that resides at the lower levels of the organization. Next, we have participative budgeting. In participative budgeting, individuals other than top-level managers are allowed an input. This style is frequently used in decentralized organizations where the budget is built upwards. Okay, so lower levels of the management or lower levels of the organization are allowed to participate, and the budget is built up from underneath to the top. And this approach is described as bottom up. The advantages of this approach are that it leads to high degree of motivation and it exploits the knowledge of what is and what is not feasible. The disadvantages are that it can encourage bias and excessive claims from individuals. And the third type of budget is the negotiated budget. This type uses a combination of the other two approaches. The advantages is that it attempts to achieve the advantage of the imposed and participative styles while avoiding some of the obvious disadvantages. Okay, so the major disadvantage is that it is difficult and time consuming to do this. Okay, now this brings us to the end of this video, and if you have found it helpful, I will ask you to give it thumbs up. If you don't like it, you give it a thumbs down, and I hope to see you in the next video.